The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Hi, folks. Basil, Chapman, sitting in for the hour of Steve Rhodes. I couldn't do the Trader's Edge. Only each one of us here at TFNN, we have these slots, and we all have our own techniques that we've developed over decades. And so I'm here with my Chapman wave notations, etc., and we're looking at the Dow down 56 at 41,311. So one of the objectives in the Chapman wave methodology is to try to identify the lowest low bar and merely count each successively higher peak as it goes higher, alphabetize them, peak A, B, C, D, E, F, and G, but it's at D, the fourth highest peak, that other things can happen. If from the starting point it gets upgraded from a buy signal, first of all, it has to go to a buy signal. Then if it gets upgraded from a buy signal to a buy mode, you should anticipate at least four higher peaks. It can go higher, but it's at that fourth highest peak that other things can happen. Well, lo and behold, what do we have? 36,661. On the 7th of April, that's where we got signals. And look what we've done. We've gone to yesterday, leg D. But look where it is. It's trading right at the 200-period exponential moving, actually just a little under it. Look how that was a repellent zone. It could go over it, but it couldn't hold over it. And look at the way the the 9-period moving average deflected lower, never even went green. Here's a big difference. This is already green. So this is a very positive action. So daily chart, 9-period moving average, price over the 9-period moving average, 9's over the 14. That's the black line, 14-period moving average. MACD is very strong. The red, this gray line right here, is relative strength, holding very nicely. Stochastic at 88%. That's what you want. You want over 80%, preferably 85%. The best is when it's holding the 90% and flat, because that means you've got a lot of buying potential still coming in. And this blue line here, the unbalanced volume, got a little bit toppy, but still very good. Weekly charts, I spoke about that in my show, the Target Conditions Hour, a moment ago. And when I show my subscribers to my opening call, I say the weekly charts had a fabulous move from 3661 up into the 41,000s. But that has not yet, because it was so long, that double top at 45,073 and 45,054 in the Dow, that this move down almost to the 200-period moving average is going to take a lot for the MACD to turn up. The histogram's starting to improve a lot, but the price hasn't crossed positive. The 9 has turned up. The black 14-period moving average is flat. It needs to move higher, and then you can start to see a cross to the positive side. I will not get a 9-period 914 crossover in the weekly chart until the Dow is probably up at 40, if it can get to 42,900, 43,200. That's a big ask. So let's go one step at a time. Buy signal to buy mode is confirmed. The Chapman wave completion of the obligation to get you at least D in the daily chart. Good. Now we have to go to the next step. So let's go to the S&P. Where's that? That's in leg C. Maybe a peak C today. We'll know by the end of the day. Still very strong, but that 200-period moving average is like a magnet. It just won't allow it to push away. So until the S&P can get, by maybe midweek next week, let's see how the China-U.S. discussions over the weekend go. But this is all game. It's all gaming the market. It's gaming everyone. If anyone took fortunately, we didn't take Trump's tariffs talk seriously enough to say that's the end of the world. I had one economist say to me, this is worse than the Prussian War. I mean, he went back that far. And all I can say is, It's a bargaining tool. There are other things that I'd be concerned about, but don't get carried away. So we'll see what happens. And you remember Trump, I've spoken about this for decades. Trump is a 1%er. He wants to win by 51% to 50%. He wants that 1%, and then he's a winner. And then he says, yep, won, and moves on. So it's just gaming. That's all he does. And it's a technique. Everybody has their techniques. That's his technique. We'll see how that works. So the S&P is holding very nicely. It's down 272 right now. But look, it's up there above the 200-period moving average rather than below, and that's a good sign. The QQQ is above everything. Look, the 9 is over the 14. It's nicely above the 200-period moving average. Not enough, but it is nicely above, and it's been there every day for the last 6 sessions. It's popped above it, and it's closed above it 4 out of those sessions. So all I can say is that if the QQQ is at 488.62, up 24 cents, can move into the 497 area. 493.62 is my target later next week. I don't know if it's going to get there, but that's what I drew for the left side, right side price time match. It isn't so much the midpoint, the plumb line I use. Usually you want to take the low from the high to the low, and then the low again back to the high. Should be the equal bars. Doesn't always work. It's a lopsided gravy cup formation. So I'm looking at this and saying, good. Now this one has a little bit better. I'm very close to a buy signal, but I haven't got it. I might have to wait another week in the weekly chart of the QQQ. But look at the monthly, how that beautiful candle from April with a long wick and a close above it has seen price above it. To me, that is imperative. And the 9-period moving average didn't budge way above the 14 in the monthly chart. That is usually very, very positive. All right, let's go to the IWM, the Russell 2000. Small caps. Small caps are trading down 22 cents at 201.03, holding quite nicely. At leg E, it's already gotten to an E and it hasn't got to the 203.33 target that I've had for next week. I don't know if it's going to do that, but that's kind of what I drew in. And it must hold, this key support will be 197 on a closing basis, very short term. Now, I do want to go to Bitcoin. Bitcoin was up very nicely earlier on. It's still up, but only up 1,720 at 103,500. It was at 104,825 in a leg E. And the 9 is way over the 14. That's fabulous. The MACD is still strong. The relative strength, strong. The stochastics pulled back to 85%, still good. I would have preferred if it was still in the 90% area. And the on-balance volume is a tad overboard. So this has been one of our favorites. We remain long. And it's broken this Chapman wave inside track repellent zone. It's gone above it. And Friday, so I can say this, if it closes like this, that 9-period moving average will go positive for the first time in weeks, and that's a good sign. And the monthly chart is still very strong. So Bitcoin has been, I've been talking about this for some time, saying it's kind of the place to go to. It's getting more legitimized almost every week. I'm reading some area that either the person or the fund or even the country just was not even interested. Now more and more the Bitcoin is a currency of legitimacy. That doesn't mean to say it can't go down sharply or it can't go up. It just means more and more money is coming in. And the more money that comes in, the greater the chances are that you have shorts and longs able to at least give cushion for sharp down moves and to stall it if it goes over a certain level on the upside. Dow's down 106, S&P's down 89. Basil Chapman sitting in for Steve Rhodes' Hour. I'll be back in a moment.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched The Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
So, folks, we're back, and this is Basil Chapman sitting in for Steve. Steve's out, and there were a bunch of questions that came in, and I said I'd get to them. So here's what I'm looking at. So, first of all, I see that EKS in the Tiger YouTube is talking about this is the SILJ. This is the Junior Silver Miners. Holding the 9-period moving average very nicely at 12.48. And silver... It's a different picture altogether. Look at the silver chart. Down, it hasn't been able to break above the Chapman Wave inside track repellent zone. I mean, I drew these lines in, these little 2 parallel lines, narrow lines, and it's amazing how they can give you so much information. And look, it tells us silver is not that strong. It needs to get to, it's a 32.88, needs to get to 34. But wait a minute, let's go to SILJ, and you've got a little bit of a different chart. Look, it's holding, it's working its way higher. The weekly chart's still green, 9-period moving average, above the 200-period moving average. So I'm looking at this and I'm saying it's something that I cannot ignore, that there's a chance that the little baby silver, look, CDE, which is one of the stock we've had for ages, periodically in and out. And then I forgot about it. Oh, I didn't forget about it, but silver was doing so badly, I just skipped it. Have a look at this. Is just messing around under the 200-period moving average of 580. 80 is the 200-period moving average. It's in the 580s. Boom! Yesterday, big spike up, and now it's gone from what was the close on Wednesday was 573. Guess where it is today? $7.29. And look how it's helped the weekly chart. Gone back to L, meaning the 9-period moving average has gone back to positive. And look how it's helping the monthly chart. So core mining, CDE. I mean, that means that I have to now, for subscribers, consider that this is a viable area where the little mini silver stocks that were doing nothing. Let's see, GDXJ, was that GDXJ? Yeah, GDXJ also has a very nice chart. This is a peak C in the weekly, a leg E in the monthly, Van Eck Junior Gold Miners. So I didn't even finish this. So I went to a C, a D, then an E and an F right there, and then it pulled back. So it looks very much like the gold chart right now. And this is the juniors, E, F. So let's look at that and see. Oh, let me just draw this in. Chapman wave. There we go. Inside track, repellent zone. So if and it's a potential cup formation, and it's a potential falling axe formation. I'll talk about those in a minute. Let me just draw it in right there. So what do we do? This is in the Chapman wave methodology. This is right here. Falling axe is where you make a high at a D, E, or an F. Then you start to make lower highs and much lower lows. Then all of a sudden it finds some support and it turns around and it breaks this upper cone downtrend line, and then it can go all the way back to that high. Well, that's what we're looking at. So if any point, if the GDXJ can see a close above, it's at 63.53, a close, that is. It just has to get over it, but I prefer a close above 64.25. Immediately, this left side high of the 6th of May of 64.77 becomes a focus. And if it takes that out, you're looking at the left side high. So this is very nice action. We're in a C, peak C in the weekly chart. Let's just go back to the one we were looking at before. That's the S. Let me go right there. SILVJ. Oh, is that? No, it was SILJ. SILJ. Yeah. So not as good a pattern as the gold juniors, but starting to move. So keep it in mind. These are moving much better, and you've got a breakout to the upside of this technique that I was talking about, Chapman wave inside track repellent zone. Right there. Yeah, it's just breaking out today, but it's a start. That's a good sign. It says at 12:48, the key support will be around about 12:10 to 11:92, as I'm looking at it right now. All right, there's the cup and the falling axe, right? And remember, I always like to look at the market as three core patterns. Right here, three core patterns. Straight up, straight down, straight up, straight down. Cup formation, arch formation right there, dreaded H, and it took it out. So, or a mix of 1 and 2 or 1 and 3. This is 1 and 3, the H pattern, and there's the reverse Y pattern. And you can see it repeats over and over and over and over again all the time. So, with that said, yeah, thank you for pointing that out. Next question was GDX. So the GDX, same thing. I haven't drawn it in. So this is fascinating. Why? Because I got to an F/B. F says, oh, be careful. B says, are you kidding? You want to buy every dip. But sometimes it's a mix. And in this particular instance, we have a mix of different patterns, and it's trying to break out. So if the GDX is able to, just the same thing as the other one. If GDX can get to 50.30, it doesn't have to close, just to touch it. I'd prefer if it closed above that. Then the next level is the high of the 6, which is at 50.83. And the 9's over the 14. The MACD has to cross positive. It hasn't yet. That's what's lagging. That's what made me a little nervous about the gold contract. But let's just see where the gold is right now. Gold is trading up 39 at 3,345, holding quite well. Okay, so AEM is just the final one I want to do in that sector. AEM is Agnico Eagle. It's trading right now at, let's see, got to refresh that. It's trading at 116.03, up $1.37. They all have pretty much the same thing. But the difference is that at peak C, in the Chapman wave methodology, once you get a buy signal to buy mode upgrade, you almost always get a D. There's no other way I can count this as a peak C. So this means Technical Eagles should still go higher, but in the shorter term, it's got to break. It's at 116 right now. It has to. In this case, I'd like a close. I'd like a close above 117.50, and immediately that left side of the 6, which is 19.32, becomes the focus point. Above that, you've got the gaps, you've got a lot of things, but at least you're going to see the MACD improve, but it's going to take a lot more for the MACD to cross positive. All right, so we did a chunk of things there. Next questions that came in. Did that. Yes. So TTD. One that we had followed in great detail a long time ago. TTD. This is the trade desk. Whoa, what a big move. Must have had earnings today. It's up E, and I'd drawn this in because it was one that I thought for subscribers I'd be very interested in buying. And then there were others that we got which have worked out. But look, this is a really strong move. It's taking you right to the next level is 75. And it's trading at 72.98 in leg E, but that's only a leg A in the weekly. There's a lot of work to be done for this trade desk TTD, trading at 73 right now, 13 to continue higher. I'll be back in a moment. Basil Chapman sitting in for Steve Rhodes.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
This year has already been a wild ride for the market. We started off heavily in the red, traversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs, trade wars, analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento over the second and fourth Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The dates for this month are April 11th and 25th, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
This portion of the Trader's Edge is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day, Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC.
So, yeah, Basil Chapman for Steve Rhodes. Dow is down 100. S&P is down just 5 1/4. We're looking at TTD, Trade Desk. I can't remember what the person, what the... Well, let me just look at it as if it's fresh. Would I buy it now? That's the question. And the answer is, we've seen so many. I had a question about Shopify yesterday, which I never got to. Shopify had a big move up to peak D. You remember peak D in the Chapman wave? That's what you look for. Then you can have something else happen. That's exactly what's happened here. So I'm looking at the has-beens, the ones that were just fantastic, the kind of stocks that, what's the name, would have been buying? Kathy Wood, with the ARC Innovation Fund, and then they would just go down 80% or something like that. But this is, so Shopify, TD, they were in different sectors. CRM did that. So that CRM is, all right, then let me just update this. Peak A, that's an A, that's an A. Then you get overlapping wave B, great. C, and that went to a D right there. Now we're having a bit of a rest. So some of these that got smacked down very sharply and have taken a long time to get. W is the same thing. Wayfair, remember, just down. I mean, coming all the way back from the high that was made at 369, round number high. You remember we spoke about that back in January of 2021. Plummets down to 20. I would say that's a little bit of a pullback. So it's in the same category of stocks in different areas that have been smacked and are now trying to come back. And that makes it really important to monitor because in the next phase, if we continue to see the big caps, like the big tech stocks, like Apple, etc., kind of stall, it gives us room to look at that. So let's just go back to Trade Desk, TTD. The Trade Desk, big move. Now, the way I would look at it is this. I have this rule. I used to discuss this with our late wonderful technician, Dave White. He calls it a rule of three. I said, yeah, it's funny you call it a rule of three because I've had it 3 to 4 sessions. It has to do certain things. So it's, and it was quite different to Dave's. So my rule of thumb is if there's a gap to the upside, if that session, it takes out the gap low, which was today, it opened at 69.75. The low was 68.98. So it pulled back a fraction. Then it went even higher. It went all the way to 75.77. If in the next 2 sessions, it either closes, it goes under the low of today, which is 68.98, and doesn't close, or it goes under today's low, but closes above, or it doesn't do either. It has an inside session. Though all three have different connotations. I don't know. It's Technical Friday. I usually do Technical Friday in my show. I did already some of the technical stuff. So I'm not going to go into it in great depth other than to say this. If it hasn't taken out 68.98 by Tuesday of next week, and there's an attempt to take out today's high of 75.77, then you've got yourself at least 3-4 sessions above the low of today, number one. And number two is, if it closes above the high of today, if this is the high today, and it closes above in the next 2 sessions, the body of the candle, that where it closed on where it closes today, and so far that's at 73.13, but it hasn't even got, I mean, we're 2 hours or 3 hours into the session, 2 hours. That's nothing. So I would then look to say, if it closes above, let's call this whole candle, I'll just make up a number right now, then the 72 midpoint, 72.20 area should become support for those next few days. After that, something else happens. If after 4 sessions that's going into the latter part even of next week, if it's still holding very well above this midpoint, then it's in a new at something completely different. It can go higher, but what you've done is raise the base of support to not the low, not the high of yesterday, which was at 61.05, but somewhere in the middle, and I'd have to go for this doji candle right here, and I'd say somewhere between 66.80 and 64. No, I'm going to say somewhere between 67.80 and 66.50. That would be the support. That's how good it will be if it's able in the next few days to go to higher highs. All right? So next question came in about Dash, D-A-S-H. All right. Peak C, it's at a peak C, and it pulls back very sharply. Now, this is what I sometimes do. You see, that's the starting point for that buy mode to peak D. If it gets taken out, this is completely fresh. So you get, this is called, in the Chapman wave parlance, this is called a restart. So it doesn't take out the low, but it keeps making peak A and lower, peak A and lower, peak A. And finally, you get an overlapping wave with, it's like confluence, and it breaks to the upside. That's usually for a powerful move up. Now, I'm not sure why DoorDash food delivery pulled back so sharply, gap down. Maybe it's earnings or something from that peak C. Normally, I'd be looking at this and I'd say I can call it an E/C as if it's continuing that D. Once it takes out that low, this is fresh. This is a peak C. Now you've pulled back really sharply from the so let's call it the 206 area. You hit the 177s, and now you're at 187, 182, kind of stuck. And so all I can say is that now I have to go to the weekly chart and say, oops, there's the cup formation, and that retest had the MACD very weak, stochastic very weak, on-balance volume was good, but now it's turning down. But the 9-period moving area hasn't crossed negative. So let me do this. I'm going to say, would I buy or would I sell? I would not do either right now. My inclination actually would be to sell, but I wouldn't do anything. Why? Because that 9-period moving average hasn't turned pink yet. That's number one. Number two, that 9-period moving average in the weekly chart is still strong. So I'm saying I'll give you parameters, and I'll say if DoorDash all of next week has one close above 190.25, in other words, it actually gets into the 190 without the green 9-period moving average crossing negative, that'll be bullish, and you would probably go to the high that was made for the gap down, which is 195.42. If, on the other hand, this becomes a dreaded H, and that's this pattern that we were looking at a little while ago. That's this one here, where it comes straight down, tries to rally, fails at a peak A or a B, and then takes out the left side low. Be careful, because if it closes under this low for 2 sessions, there's a good chance it's going to do a 1-to-1 of the whole move there, and that says under 175.50. I'm going to say under 175. That's very weak, and then the 200-period moving average of 167 kicks in. What would I do now? Nothing. My bias at this particular point with the candle of this daily and weekly says, it looks like it really wants to come down more. Okay, I'll be back. Basil Chapman sitting in for the one and only Steve Rhodes. I'll be back in a moment.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
In the In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
So I'm back. Maybe I got too carried away. Did I finish that? Let me just do the dash. Yes, I did. Now let's go to Pony. Shelley in the YouTube. Can we take a look at Pony? Well, this is no Pony. This is a Preakness. This is the real thing. I mean, tootling along in the 4s just a week and a half ago, and it's trading at 18.67. When I looked up to see what they did, it says here, Pony AI and Uber announced strategic partnership 3 days ago. Oh, man. That is really good. Okay, so this is in play. This is Pony AI develops autonomous driving, large scale, using AI. Everybody uses AI. I don't know why they even say that. But this is spectacular. It was just a go nowhere position in the 12s, and it goes into the 20s, and then it slumps down to the 4s. Oh, man, it looked terrible. All of a sudden, guys, we got this offer. Man, we got this. Oh, we are made. Yeah, well, that's what it looks like. Very good. So it's in leg C. It's based in China. Oh, you didn't say that. Okay, based in China. All right, good. I'm pleased to know that. I'm going to put that down here because that makes a big difference for me. The reason being, it's not as simple. That's all. I know someone here who works with people who are doing the AI, autonomous driving, etc., for automobile companies, Stellantis and others. It's not that easy, but it's starting to find some scale, and that's really important. All I can say is just on a chart basis, the target would be the high that was made. It's all-time high since really an IPO just from 2024 back in the 13s pops up to the high of 23.88 on the week of the 21st of Feb. I would say 21 down to 4 is a little bit of a problem, okay? But look at this, leg A. So if it's able, in leg C, to go to a D, and that D is C, this C could continue. You never know, right? Because the MACD is good. Stochastics are 94%. That's what you want to see. On-balance volume says, oops, a little bit overbought. Relative strength is great. So all I'm going to say is that 1630 is probably 1670 to 1630 is probably the support for a peak C if it's here. If it's a little higher up, just raise that whole thing by whatever the percentage is or whatever the point is on the upside. But my eye says that if I can open this up just real quickly to the previous peaks, yeah, there it is. I thought there'd be nothing. There was nothing. So all I can say is that this high that was made on the 25th of Feb of 19.36, the chart remembers it. Nobody else might remember it, but the chart knows it. And if at any point it's able to close above 19.50, immediately you've got to look at this cup formation. Could I join a left side, right side price time match? Let me do that. Now, obviously it's lopsided. So therefore, using the Chapman wave technique, I have to find the plumb line, which instead of being there, which doesn't look, I can do it, but this is moving very quickly. So I want to, now what I normally do is I don't go to the high. I keep it in mind, but I go to this level right here. That looks a little bit more attainable. And I choose a particular candle. And usually I'll choose the tiniest candle or a peak or a trough. In this case, I'm going to choose the candle of the 4th right there. Check it out. Yep, there it is. And then I'm going to click. TradeStation allows you to do this very easily. Click. There we go. To the right. That's green. And it says by the 19th. By the 19th, I think that's a Monday, right? 19th is a Monday, May the 19th. There should be a test of this high. And now I've forgotten what the price was, of course. Let me just get to it right there. Color. I usually make that pink. Okay, what is the price? The price is, what did I say it was? 21.90. 21, that was there. This is another one. This is 21.90. And then I have to do a Chapman wave inside wedge target repellent line. So I take it to the trough of importance right there, and I go to that high right there, and we'll see. I'll probably forget about it because, I don't know, this is a little tough at this point to get in for subscribers. But definitely it's got a lot going for it. The China part of it makes me a little bit cautious because you never know. You just never know. So we're talking about this. That's the low. So it's lopsided. It's a gravy cup, lopsided pattern right there. All right, so I've just drawn that in. We'll see what happens. So I hope that helps you. Yeah. Okay. Next thing I want you to do, which I wrote it down. I didn't get a chance to do it. Disney. All right, so Disney. Just kind of nothing. Boom, suddenly it goes from the 90s to 105 right now. Oh, this is the gap. This is exactly what I'm talking about in the gap. See, there's my rule. I don't give it a 3-day rule because I've got different parameters dependent on the actual type. Look, this is the second gap. So here's the first one. So it's a second. So what this says for if there's a third day above this candle right here, that's the candle of the 7th with a high of 103.31. It says that the open closing price at about 102, that's going to be key support. And it should hold as support. But the moment it's taken out, be careful because the next magnet line or candle or gap or something, well, it's the 200-period moving average of 100.59. That'll become a magnet. It'll drag the price down. The higher it stays in this range, the longer it stays in this higher range, the greater the chances are that Disney is finding new buyers. And then all of a sudden you can say, oh, wow, down in the 80s just 5 weeks ago, and now it's 20 points higher. Nice move. But the 200-period moving average of 108.25, that's going to be key. Can it get there? Now, of course, we're talking about a stock that was once 203.02 back in March of 2021. So gone to a trough E and then a retest. Oh, talk about the double bottoms. So I've been talking about this for ages and ages, and I've been saying we've seen so many double bottoms. I changed the color. I made it the wrong color. That's a blue right there. So look at this. The low of, I've been talking about this for a while. Didn't do anything about it. How silly is that? October of 2023, the low is 78.73. Look at this, 78.73. Where do you think the low is on the retest? Well, the low is 80.10. $1.35 or something away. Isn't that amazing? Almost a year later, 78. What did I say? 78.10, something like that. 78.10. Okay, so this is very important because you've had the arch, the dreaded H pattern, but you've had higher MACD on the low. Stochastic was a little better, but not much better. On balance volume had already given you a low much earlier, and that just says there's a chance. And this is the reason why I think it's so fascinating that we're going step by step, and I'm looking at stocks that are telling me the big crash that everyone was talking about for weeks. I think, 99.9 economists that have been interviewed are talking about huge, major disruption, crash type thing. Now, maybe it's 90%. I don't know what it is, but it's a big percentage. When have the economists ever been right? I'm saying I kind of like what I see in the bigger picture. Yeah, now you've got Disney finally taking off. That is important. I'll be back. Dow's now only down 50. S&P's up 4. We'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
So Hoth, a search engine marketing firm specializing in SEO, and Hoth Therapeutics, a clinical stage biopharmaceutical company focused on developing new treatments. So HOTH trading at 95 cents down 2 cents, has made a potential instant restart here. When after a D within 3 bars you make a high, you think E/A, the next one will be F/B, etc. But the 200 moving average of 1.01 is really key. This is in the biotech area. I'll do Monday if I remember. I'll try to do. I've got a whole list of that you might be interested in, Dan, and many others who do biotechs. Just the little ones have been screaming. This one's building some strength. That's good, but the way it looks based on the weekly chart is going to have to be news that takes it to the 1.10 area. Right now, it's just building some strength. All right, so with that said, before we wrap up, I'm just going to tell you, look, the VIX index is down 38 cents at 22.10, getting closer to the 200-period moving average of 20.44. I suspect that if it gets down there, that's where you're going to see a chance that we have a big spike up in the VIX index, and all of a sudden the market will take a bit of a dive. We haven't got there yet, or at least in the low 21s. All right? In the meantime, I love what I'm seeing. This is in the Chapman wave. You want to get to a peak D, and then you have to reassess to see if you can continue higher. We're at a D right now. I suspect by the end of the day it'll be a peak D in the Dow. It's only a C in the S&P, so that's still bullish. It should still take another push to the upside to make that D, and you can go through all the different charts. So we've been long. We did because we have no short positions. We are long. We've added a couple of new longs. Some of them didn't quite work out. Some of them worked out beautifully. Most importantly, what I am looking at is there's a rotation going on slowly. It took time. It was very select. It's just broadening out a little bit. Remember, we looked earlier on. I was looking at TTD. So we're looking at some areas that are just starting, Disney just starting to break out. That's a big thing. So with that said, check out my opening call daily newsletter. I'll be doing my video for my subscribers, an hour and a half video this afternoon for subscribers, looking at the market, the overview, etc. Steve is out today, so I took over, but I will be back on Monday.